Despite the worsening Ukraine-Russia crisis, global markets stabilized on Wednesday as sanctions announced by major economies, including US, UK, Japan, and Australia, hit markets not with a bang, but with a whimper. Instead of a sweeping package that crippled top Russian banks, cutting its financial transactions off the global economy, or personally singling out Vladimir Putin, the US and its allies settled on a modest first tranche of penalties. Markets responded with a shrug, underwhelmed by the tit-for-tat approach. The sanctions targeted a pair of Russian banks, VEB.RF and Promsvya's bank, as well as 3 members of Russia's elite with close ties to the Kremlin. The penalties also sought to freeze future purchases of Russian sovereign debt. Yet the sanctions hardly amounted to the economy-crippling measures the US and its partners long telegraphed if Russian troops were to roll across the border. Not surprisingly then, the BSE Sensex and the Nifty 50 closed with tepid losses of 0.1% each, ending at 57,232 and 17,063 level, respectively. However, the broader indices outperformed the frontline indices. The mid-cap index on the BSE advanced 0.6%, while the small-cap index climbed 0.9%. The likes of Yari Digital, Raymond, Orient Bell, Crompton Greaves, Oberoi Realty, Adani Power, IRCTC and JSW Energy rallied between 3 and 20%. This bounce back comes after a sharp fall of over 10% at index level in the past 1 week, where 13 stocks from the Nifty Mid-Cap 100 pack and 18 from Nifty Small Cap pack hit 52-week lows. So does the reversal mean that the downward trend has bottomed out, or is it just a dead cat bounce? Let us go to Business Standard's Avdut Bakkar for a quick technical analysis.
The current trend for mid-cap and small-cap stocks looks tentative, rather it shows a riskier prospect. However, if both the indices show aggressive reversal on a positive note, then one can look for early entries. At the moment, there are about 13 stocks in Nifty mid-cap and around 18 stocks in Nifty small caps hitting fresh 52 weeks low. Mid-caps include stocks like Amara Battery, Exide, Manapuram Finance, whereas in small caps we have CEAT, Indigo Paints, Rallies India. These are the stocks which are hitting fresh 52 weeks low and severely losing their upward momentum. On technical front, Nifty mid-cap needs to defend 50 weekly moving average placed at 28,270 levels so it can revive some hopes. Whereas for small cap index, which has violated most crucial support levels of 200 DMA and 50 WMA, 50 weekly moving average, it is highly advisable based on the chart to stay sidelines, especially for small cap index.
Fundamentally too, D Street mavens say investors should stay away from the space as market situation remains volatile. They also say investing in large caps could be a better option at the moment where balance sheet strength is strong. As regards today, the developing situation in Eastern Europe and monthly F&O expiry back home will guide the indices. That apart, stock-specific action, oil price movement and bond yields will also affect the market sentiment.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.